We'll have to see how that plays out. Well, Dr. Lal Pathlabs, that's the stock in focus. I think the stock actually is under pressure. It's down 2.5%. Quarter 2 revenue was in line. PAT came in better than estimates. The margins improved by around 70 basis points on a year-on-year basis. Do note the company has guided for revenue growth better in FY25 in comparison to FY24. Mr. Banerjee, the CEO of Dr. Lal Pathlabs, joins us on the show. Hi, Mr. Banerjee. Good morning, and thanks a lot for joining in. Well, the management has said that FY25 revenue growth will be better than FY24. What numbers should we work with? In terms of pricing, you're saying that you'll keep pricing stable. So it has to be the volume factor that will play out. What is the volume estimate you're working with?
So, we keep the guidance as I have been mentioning for the last 2 quarters, better than last year. If you look at, our H1 performance at 10.5% is ahead of last year growth. And, I think we retain the guidance of having better than last year performance, and all of this without a price increase. Now, having said that, I think the growth is going to come primarily from sample and volume growth, as well as some realization improvement that we continue to see, and we believe which is sustainable going ahead, driven by, better geography mix and product mix that we are able to generate. So one can say that, maybe it will be half-half driven by patient volume and realization improvement. However, if you note, our sample volume, which is another measure of volume, is actually tracking significantly better than the patient volumes, driven by our bundling test offers that we see is getting traction.
Okay, all right. Let's focus on a couple of aspects then. Suburban was a pleasant surprise, I think, for the past quarter. It grew, I think, by around 12%, and margins moved to 20% in comparison with the mid-teens, which is great news. What is the growth estimates you're working with for Suburban? And this margin around 20%, is it sustainable? Because it helps the entire pie then, the consolidated margins as well.
So Suburban, we've been working on, the growth agenda on Suburban for almost 2 years now. I think since the acquisition, there were a few initial setbacks, but I think the team is working quite diligently. And I think we are now starting to see some of the good results start coming up. So I think sustaining the double-digit growth that we have seen this quarter on Suburban is going to be a clear focus. And I think we've been saying throughout that the focus in Suburban right now and overall invest also is on revenue growth, not so much on margins. The margin in Q2 typically is higher than maybe the averages. We've got a bit of fluctuations quarter to quarter. But I would not read so much into the margins because, we get benefit in terms of the, operational efficiency, as well as the, scale benefits that we get due to the higher volume in quarter 2. So the focus will continue to remain on revenue growth for Suburban, and we'll see whatever, margin profile comes out of it is fine, because the more, the better or the more important number to track would be the company overall margin profile.
So what is that likely to be? Mr. Banerjee, let's get to that then. What is the consolidated margin likely to be? You're pleasantly surprising, or they're more than 30%, but you're still talking about 27%, I think, as a guidance. Is there an upside risk to the guidance that you're giving out?
So, again, Q2, as I was mentioning, is one of our better quarters. And, typically the margin structure in Q2 looks higher because of that. And also, if you look at, traditionally, H2 margin profile is lower than H1. So we definitely see moderation from whatever we have delivered in H1. And last year, our overall margin we delivered was about 27.4%. I think we'll end up at similar, maybe slightly better than that margin profile.
So still around the 27% mark on a full year basis. Got that, Mr. Banerjee. Take us through the competitive intensity as well, and where, the industry is on price hikes. I think you've said that you will not be taking any price hikes in the near future, right?
So what we've been saying is that we don't want to take a price increase, at least this year, for sure. But we obviously keep a close eye on how the competitive market is, as well as, what is the cost structure, margin profile, etc. And that will determine what our pricing stance is going to be. But given our strategy of going into the tier 3, tier 4 markets where affordability is always a key criteria for selection of a brand, we would like to maintain our pricing. In terms of competitive intensity, I think it remains more or less the same as it has been in the past. The only thing that is kind of seen is some of the irrational pricing that we had seen in maybe a few quarters back. That has definitely subsided and stays that way. However, other players are there in the market, whether it are in terms of other diagnostic chains or the pharma companies getting into diagnostics, or even hospitals getting into diagnostics, and even the standalone labs that are there, as part of the whole landscape.
Sure.
Intensity on that thing obviously is still there in the market.
Okay, Mr. Banerjee, just a very quick last question. Only 30 seconds left on this conversation. You have a decent amount of cash on the books, right? I mean, you have a nice, comfortable position of 1,000 to about 1,100 crores. So what are you looking at? I mean, how can you be satisfied with just about 11% top-line growth, given that you have this cash at hand? Would you be looking at inorganic opportunities? I think you have an organic rollout plan of around 15 to 20 labs this year. Would you be looking to increase that intensity? Just leave us with some thoughts on cash utilization and pushing the growth needle a little more.
So the cash utilization, we have said, that there is obviously some capex, some kind of, dividend, as well as we want to keep something, given that, South we have identified as a geography where we would possibly be looking at inorganic opportunities as well. And in terms of pressing the growth needle, I think once we get this whole, stability in terms of the organic picture, we will obviously be looking at ways and means of how we can maybe step up growth going forward.
We leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC TV18. Thanks indeed. Well, I think markets have recovered, and we are down about 20 points now from being down about 60 or 70 a little earlier. As we slip into a quick commercial break, here's a programming reminder. It doesn't get bigger than this. Coming up on CNBC TV18 today is a fireside chat between Jensen Huang of NVIDIA and Mukesh Ambani of Reliance Industries. They're speaking at the NVIDIA AI Summit 2024. These two gentlemen will speak about AI's pivotal role in shaping industries and India as an emerging global AI leader.